I've got 2 tips regarding financing a home purchase that could end up saving you tens of thousands of dollars. Here they are. A little context first though. Assuming you need a mortgage when you purchase a property, most people do, then the lender of your mortgage will almost always want to investigate whether they agree or not with what you paid for the place. The bank wants to know whether or not you made a good investment, seeing as they could be financing up to somewhere between 80 and 95% of the value of the home. The lender does this by doing an appraisal, which is an assessment of the value of the home conducted by a third party, a certified appraiser. This valuation is commonly done within a relatively short time span of the closing date or when you take possession. In a market where prices are doing anything from staying fairly consistent to skyrocketing, the timing of the appraisal likely isn't an issue, assuming you didn't massively overpay. In a market where prices are declining, when the appraisal happens could be a huge problem for the buyer. Here's why. The value of your purchase could be potentially lower around the time that you take possession compared to when you agreed to a price with the seller. The bank would then only give you a mortgage associated with the lower, more recent value, but since you paid more than that and you don't qualify for a higher loan, you're responsible for making up the difference in cash between what you paid and the loan the bank is willing to give. This scenario is referred to as a short appraisal, and you can find out more information about it and how much it could cost you in a previous episode of mine, number 148, called Potential Consequences of Not Including a Financing Condition. So what can you do? 1. Close quickly. Don't give the market too much time to continue to fall before you officially become the owner. And 2. Finalize every financing detail, including appraisal, almost immediately after you and the seller reach an agreement. And let's say that you were able to purchase a home with a financing condition. The typical length of time for a condition is 5 business days. And in my experience, it's not a guarantee that your bank will send an appraiser to the home during that 5-day period. You could either try to extend the length of the condition by a few days to allow more time for the appraisal to happen, or you could work closely with your mortgage representative to ensure that they'll do everything they can to get the appraisal done during your condition. Now, there's always the chance that the bank does a second appraisal on the home closer to the closing date, so you may not be completely out of the woods by getting the appraisal done early. With the market dropping the way that it is, you'll want to try and mitigate any potential financing issues you may have, because once the financing conditional period is over, you're fully committed to closing on the property. I'm Jamie Harnish, Toronto Real Estate Navigator with Bosley Real Estate. I want to thank you so much for your time. I appreciate you watching. If you enjoyed this video, I'd be thrilled if you would like it, if you would subscribe to my channel to see any upcoming videos.